Hello everyone and welcome back for the final portfolio update of 2025. I'm recording this on December 31st of 2025. If you're watching this in the new year, Happy New Year. And I hope everyone has a great 2026 and we continue to do phenomenally investing. 2025 was a great year for me. In this portfolio update, I'm sitting at $284,184 right now inside my Wealthsimple account. And I just did some math. I have a little bit of a difference in my portfolio. It's Wealthsimple, like it's updating live with the US dollar and everything. So it's going to change every minute. But here, 284, 148. So ending at that number, and 2024, I ended at 209, 194. So that was an increase of basically $75,000 with $33,000 in contributions this year. So I had about $42,000 coming from stock market returns, which is just phenomenal. Yeah, really happy about the performance in 2025. And I hit my goal of $33,000 invested in 2025, and I had a bunch of additional savings on top of that. So hit my goal of 33K, and I had $7,294 of savings added to my savings account in Tangerine. So that's kind of nice because I had it pretty low. I had like maybe 5K in savings. So now I've got about 12K, which is pretty nice because then I can, if I'm, going for a vacation or something, I don't have to worry about getting too low on my savings. So I definitely wanted to bring that up. So that's definitely pretty nice. Yeah, let's get into this portfolio update. Um, so in terms of dividends, I received $729 worth of dividends for this month. Had a VOO payment, so a nice quarterly US dollar dividend from VOO, 83.45 in Canadian dollars. From VDY, $125, ESPX, 285, and ETSX, 185, and then the 5135 as usual from SBLT. So pretty good month there, $729. Yeah, and I think next month is going to be insane because I have a huge payment from VEQT. So in the FHSA, getting if it's the same as the distribution. I don't know if this is the announced distribution or if this is the distribution from last year, but it'll probably be somewhere close to this range. $468. So first year with VEQT I got 155, and then 312, and then yeah, now like probably well over 450. So that's going to be really nice. That of course that's in the FHSA, and I'm obviously not going to touch those dividends, but it is just also pretty cool to see the just see how far I can push this chart up. I'm pretty sure it'll go over 1250, probably even close to 1500. It's going to be a phenomenal, definitely a phenomenal month for dividends in January. But yeah, that's really great to see. And yeah, just the performance this year. So looking back at the year, we had obviously the Trump tariff announcement, and there was panic and mayhem. And if you look back at it now, like I didn't even really check Wealthsimple that often. And during this time, I was just like, I'm not going to worry about it. Honestly, I'm just going to average down by whenever. And I actually timed my VOO. So I actually have VOO lump sum contribution, and I got it like almost right, like just as it was starting to recover, right after the Trump tariff announcement. So that was phenomenal timing because I got an excellent return on that money that I lump summed into my RSP with VOO. So that was some great timing. But yeah, like just goes to show, guys, like you gotta you gotta stay the course. Like there's gonna be crashes. There's gonna be market events that happen. Um, it's really just weathering the storm, making sure you're confident in the investments that you're making. Because if, again, like there's there's gonna be these events that happen no matter what. Like in 2026, I'm sure something might happen like that, or maybe not. Like there's no real certainty. Um, you know, there is some great. I think there's some really great indicators in 2026. From my perspective, I think because they're, if you guys don't know, we have to, in the U.S. they have to appoint a new, um, I don't know what they call it, like Fed chair, I think is what they call it. And so Jerome Powell's time is just about finished in the at the Fed. So I think what's going to happen is what you could see is Trump's going to appoint a new Fed chairman who's going to run the Federal Reserve in a way that the U.S. interest rate gets cut like pretty significantly, probably even a full percentage point from here, and that's going to trigger, I think, like some ballistic growth, in my opinion, in the second half of 2026. That's just my official prediction. I don't really know if that's how it'll pan out, but you know, I think that there is a lot of potential for a big increase in 2026, to be honest, because of that. Because if they cut interest rates significantly, the U.S. market's going to really start to amp up. So of course, it's forward looking, so maybe that's already priced in, but I don't think so yet. It's because it hasn't, it's not really certain yet or anything like that, and those can be big things that move the market. So, but yeah, I really see it like there's definitely a possibility for that, and I also think that emerging markets and international markets in Canada, I think they're also going to continue to perform really well. I think they're the fund like really they're undervalued like compared to the U.S. stock market significantly. Like if you just take a look at like the PE ratios of the stocks in the S&P 500 versus Canada and international and emerging markets, there's a lot of value there still. So I think there's those are definitely some good investments to make. So and I'm happy with how I've gotten closer to my target weightings for these various funds in my portfolio. So, yeah, it's some really great progress this year. Gold, 2025, the year of gold, the precious metals, gold, silver, silver even more so than gold. But I hold gold obviously in my portfolio, so I'll just speak to gold. But um, significant gains in gold. So, and I don't see that stopping anytime soon. If you think about it, like look in Canada, we're gonna have an $80 billion budget deficit, and in the U.S. 2 trillion. So, if you think that's gonna change anytime soon, you're mistaken. That's not going to change anytime soon. The governments are going to be posting massive deficits that will lead to more inflation, and gold is going to continue to benefit from that. And also, the integrity of the U.S. Treasury bond is in question. Like if you think about like other countries like China, Japan that hold boatloads of U.S. Treasuries. What have they seen? What have they seen in the last few years? They saw a guy shake hands with thin hair, and now you've got Donald Trump in there who's declaring trade wars with everyone. It seems tariff on, tariff off. So really, do they want to be holding long-term U.S. Treasury notes, T-bills? Like, probably not. So if they're not going to be investing in U.S. Treasury bonds, and you've got this $2 trillion deficit each year and a growing national debt, well over like getting close to $40 trillion. Like, where do you think they're going to start putting their money? And that's because if they can't, they're not going to buy U.S. T-bills. They're going to be putting it into something that they can deploy lots of money into, and that is gold. It's a great store of value. Central banks around the world have just been buying gold like crazy. And I don't think that's going to change anytime soon because, like I said, they're not going to balance the budget in 2026. So Canada, U.S., there's no way. They're going to continue to run up massive deficits and run up the debt, and they're going to lower interest rates because they can't service that debt because they have so much of it. So with U.S. national debt, you have interest if they even increase the interest rate slightly, it's just devastating to them because their sorry, the amount they're paying to service the debt, the total interest paid every year is now exceeding huge budget items. Like it's more than national defense, and it's going to be, I think, in a few years, it's going to be more than Social Security, Medicaid, Medicare, and defense combined because you have so much debt in the U.S. and yeah, like so all this to say is that gold is going to continue to shine because there is a lot of uncertainty, and there's also a lot of just reckless spending from these governments that's allowing it's definitely going to give other countries the green light to just say dump their U.S. Treasuries and continue to buy gold because, or at least not if they're not dumping their U.S. Treasuries, they're just gonna stop buying them and buy more gold. They might not necessarily sell them, but yeah, I definitely see that as my prediction. I think gold has had a great year this year, and I think it is going to continue to shine well in 2026. So I think definitely keep my eyes out. I think definitely add to my position in gold. It's fared very well for me, and got a 55, uh, yeah, 55 basically. Yeah, I don't know, round up. We have 54, 55% return here with gold this year, or sorry, overall. So, and I've also been buying with that too. So if I didn't buy this year, I mean, I've been averaging up, obviously. So I think from the gold that I bought, I think towards the end of 2023, definitely up way more than that. So very happy with how that's been performing. But yeah, the rest of the markets, obviously the US didn't perform as well as the um, other economies in the world this year. So like the TSX and the international emerging markets definitely did better than the US economy. But I definitely think that the US, yeah, again with a new Fed chair appointed, you could definitely see a lot more inflation in 2026. And I mean, the Federal Reserve has already started printing money. They're now going to be printing. They started December 12th, quantitative easing. Um, they're calling it reserve management, but they're printing about $40 billion every single month. So that's going to be highly inflationary. And obviously, if you get someone in there that's going to cut interest rates the way Trump wants, you're going to get a lot more inflation. And when there's inflation, you want to be holding real assets. So stocks are definitely a solid real asset that are going to also increase in value and benefit from that inflation. So I think the U.S. market could definitely have a really good year in 2026. I think 2025 was maybe a little bit subtle, uh, you know. So I think 2026 could be even better for the U.S. So yeah, that's about it for this update, guys. Happy New Year. Hope everyone has a great and successful 2026. And I'll see you guys in January with the first update of 2026. Catch you guys later.